Lucas Bolahood here with Coldwell Banker RMR and the Bolahood Group. I'm joined today by my good friend Alex Jobb. She is a mortgage specialist with RBC, and we're going to spend a few minutes talking about what she does at RBC and how she helps her clients mortgage-wise. I got to tell you, Alex, I'm super happy for you to join me today. Just to give people a little bit of a brief history on my relationship with RBC. I've worked with them since I bought my first house. They helped me, get a bridge mortgage to buy my second, and then help refinance our home again later this year or earlier this year. And they've been wonderful for us. So there's no one else and no other lender that I want to work with than RBC. So I'm super happy, Alex, that you've joined us today. So just as we jump in, talking about you a little bit here, tell us how long you've been in this business.
Okay, thanks so much for having me, Luke. Super excited. And I know we have a large variety of topics that we can dive into. So I'm super excited about that. Little bit of history. I have been with RBC for almost 15 years now. It's been a while. I started while I was a student at the University of Guelph. I took housing and real estate management there. And as soon as I was finished my schooling, I had the opportunity to come back to Durham Region and jump into the mortgage specialist role. So I absolutely love it. I've been in it now for just over 12 years, and I look forward to a long career in this role.
So what drew you to that career though over maybe something else you may have done when you were going through school?
I was always interested in real estate, really. I have to say, I don't know if you know this, but I thought I wanted to be a teacher at some point. And then when I started working in the branch and then learning more about the mortgage specialist role, because I have family that works in it as well, I realized that doing this role, I was able to help clients and educate my clients. So I was getting that fulfillment of, my desire to teach. I was still able to do that as a mortgage specialist. So it's been great.
So on the topic of fixed and variable rates, Alex, I know you've shared this with me briefly, so I do want to touch on an illustration, a difference between, the payments for a variable versus a fixed mortgage. So I'm just going to quickly share my screen and we'll take a look at this graphic that you put together for us. So tell me about this here.
Absolutely. So we are just looking at three different scenarios here. And in our first scenario, well, for all the scenarios, we've used a mortgage amount of $500,000. That seems to be sort of, I don't know what the average mortgage is right at the moment, but for Durham Region, but I wouldn't be surprised if it's around there with the way prices are. So looking at a $500,000 mortgage and a 25-year amortization, I've just illustrated a 3-year fixed and using 2.5 as the interest rate. That monthly payment will show at the bottom of the screen there, which is $22.39. Now, in the second scenario, just to compare, I've done an interest rate. This is a variable at 1.5. So the difference is 1% of interest rate, and see what it does to the payment. It's about $2,000, right? So about $240 difference from fixed to variable. So when I discuss that with my clients, I find that most people are drawn to the variable because, hey, I'd love to have a cheaper interest rate, cheaper payment. But what if rates go up? Because they're expecting rates to increase. And we will likely see an increase eventually on that prime rate for our variable pricing. So what I discuss with my clients is, if you want to take the variable, that's great, but let's get ahead of the game here and set your payment higher. So at RBC, we do have a prepayment option to utilize called our double ups. And that allows you to use a minimum of $100 up to double the regular principal and interest payment. And that goes directly to the principal. So if you're going to get into this lower rate and that generates a lower payment, pay more, pay maybe that fixed pricing, right? Round your payment up to $2,200 a month, and you will, be paying your mortgage off faster. If you don't want to think about the changes of rates over the term of your mortgage, then fixed is probably for you, right? You do have on the variable the option to lock in at any time, but you don't lock into a variable price. You lock into the fixed going rate at that time, right? And you have to take you have to. So
they allow you to sort of change change into a fixed plan, but at any point in time you decide to.
Yeah, you can. Now, when you go to lock it into a fixed price, you have to take the length of your remaining term or longer. So this variable is still a 5-year term. If you had been 1 year into that term, the length of your remaining term is 4 years. So you could look at a 4-year fixed rate, a 5-year fixed rate, a 7 or a 10, right? So you do have options there. Now,
And so normally a variable rate is usually lower than the fixed.
it is, yes.
Okay.
Typically.
Okay.
So, and we'll see what goes on in the future here. Now, the third column is our third scenario, and I just wanted to show our audience how we use this qualifying rate or the stress test. Everyone's talked about, oh, this stress test that came out in 2018. So what that does, it actually inflates the payment within the application to using a higher interest rate. And in this case, the current qualifying rate is 5.25. It used to be 4.79, I believe, and it increased in the summer of this year. So that's set by the Bank of Canada. And that is to ensure that our clients can qualify for the debt that they're borrowing, the loan, the mortgage that they're borrowing at a higher interest rate. So it doesn't mean that you're locking into that 5.25. We're just making sure that our clients can service the debt if rates were to increase. It's really protection for the clients and to make sure that, you know, down the road, you come up for renewal in 5 years, wherever rates are, that it's still within, you know, our servicing guidelines, that you're not overstretching. But you can see that difference, Luke, like from your first payment on a fixed rate, around $2,200 up to almost $3,000. So that just gives you a picture of, hey, what if rates were at 5% one time? That's what you'd be looking at.
And at least you have that peace of mind knowing that we'll still be okay. We can still afford to do this, and the bank won't be coming after us. Right.
Now, everyone's budget is different. I just have to stress that even if your interest rate is low and that you're comfortable with the carrying cost of your mortgage, that's fantastic. But you always want to make sure you're still putting money aside in savings and not accumulating too much other debt, you know, in regards to credit cards, loans, or other lines of credit.
Wonderful. Well, that's really helpful, because that's one of the things that, you know, me being someone who's sort of a risk averse person, I don't like taking too much risk. So I'm a fixed mortgage kind of guy. But a lot of people I talk to, they're like, oh no, these great advantages of the variable rate. You get such a great rate. So it's really, you know, valuable to see the differences here depending on what your risk tolerance might be as well. So, and again, that sort of safety net with the stress test. But I think it was June this year they made the changes and increased that rate. Was it? I think it was this June. Maybe I'm thinking last year, but this pandemic's been a blur.
That's right. I think it was this summer. It's a blur for me too.
Yeah. Now, one thing I think is helpful for consumers and buyers here is, you know, if they're trying to decide where to go for a mortgage, you know, what sort of other things other than just the interest rate, like we're talking about, should they be looking for, you know, to try and select the best group to work with?
Yeah, so I would say, Luke, that it's so important. Interest rate is just one piece of the puzzle, right? And you want to look at the whole, you want to look at the whole picture and see really where you're getting the most value, right? Interest rate's one thing, but you know, are you comfortable with the representative that you're working with, the mortgage broker or mortgage rep? Is it someone that has experience in the industry and someone that you can count on? Do they have experience structuring unique deals, clients that have multiple properties, or maybe they're self-employed? Are they familiar with the product or with the programs that the client may need to get approved? So that's important. And then also, like, our suite of services at RBC is so grand. I work very closely with my banking advisors, financial advisors, investment and retirement planners. We've got Dominion Securities, commercial banking. We're such a large division and team, and we really work together, which is fantastic. One of the other things is, you know, when we talk about value, you probably have these conversations with your clients when it comes to finding the price or a house. If it's the cheapest thing out there, it might not be the best value for your client. So you're just making sure that they're serviced properly and getting the right advice.
That's wonderful. And you know, one of the things too that we stand by with RBC is this firm pre-approvals. That, to my understanding, no other bank offers these firm pre-approvals. So once you approve me of an interest rate, I'm locked in at that rate for a period of time, correct?
So the pre-approval is one thing, a firm approval is another. So your pre-approval, you're talking about holding the interest rate. So that is guaranteed when you're done, when you do a pre-approval with myself or a representative at RBC, then we are committing a rate to you for 120 days. Super important right now in a raising interest rate environment, okay? So at that stage, we're pre-qualifying our clients and we're holding the rate in the system. When it comes to a buyer and you've got, you then have a property, once we have the collateral details, so your MLS listing and an accepted offer, we can convert that pre-approval to a firm approval, which is the terminology that you were thinking of there. And the firm approval is one of our strongest points of our approval process to RBC, and it's an advantage over our competitors. So what that guarantees our client is that when we issue a firm approval, we've done our credit check, we've done our income verification, we've done our due diligence of the property. Sometimes an appraisal is required, sometimes it's not. But we've done all those checks to ensure that on closing, there's no issues with the mortgage, you're guaranteed to close. Some other banks or lenders, they can come after the client and ask for more documentation. They'll do a verbal to your employer. They're looking for a notice of assessment. They're doing an appraisal just before closing, and you don't want that stress on your clients or, you know, the clients listening. You don't want that to happen to you personally. So RBC offers a firm approval process once we have the collateral on the other end of things, and it's great peace of mind.
Yeah, certainly no one needs that added stress at the 11th hour when you're trying to pack up your home or get ready to move in, and only find out right at the end that something might fall apart or they need something at the bank. That would be a heart stopper for sure, without a doubt. Well, Alex, this has been great chatting with you today. This is a new segment that we'd like to get, partner up on and continue to learn from each other on. I'd like to call this one Finance Friday. So what we're going to do here over the next while is bring some more content to you here on Fridays. And Alex is going to be joining us, folks, for all of these great content conversations. And we're going to learn lots about, the finance world and how we can best make use of our money. So Alex, thanks so much for joining us today. I look so much to the next time we chat.
Oh, thanks so much, Luke.
All right. Have a great day, everybody. See you soon.